Good morning. Welcome to Stock Market Today. It's Friday, November 20th, 2020, and this is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I am at Dan Russo _ CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show. We also give you daily stock ideas to consider, and that hits your inbox every trading day before the market opens. So U.S. equities closed higher in Thursday's trading, finishing near the best levels of the day. Most of the sectors were in the green, with energy, tech, and discretionary leading. Healthcare and utilities were the only sectors to close lower on the day. Treasuries were mostly stronger, with the curve flattening. The dollar was weaker on the yen and euro crosses. Gold finished down 70 basis points. WTI crude settled down about 30 basis points on the day. As we get to the desk here this morning, S&P futures are a little changed, but we'll note that they've rallied back in a big way from the overnight session. Asian markets were mixed overnight, China leading while Japan lagged. European markets are higher and on track for another week of gains. Treasuries are unchanged. Dollar is slightly better versus both the euro and the yen. Gold is up 10 basis points. Crude oil is up 90 basis points to kick us off on a Friday morning that starts with the S&P fighting at the breakout level. You could say the Qs are doing the same. IWM solidly above the 170 breakout level. So as we think about what's playing out in the market here, we've highlighted the overbought conditions for about a week and a half now. And you've seen some choppy trading in the near term for the most part for SPY and Qs. For support levels for the SPY, unchanged here in the near term, 340, then 320 below that. Qs, 260 key support. As long as we're above 80, you're playing for the highs in September. IWM, support near 170, then 160, but small caps really showing some relative strength of late. And we'll look at that a little bit later on. It's prominently highlighted in my note for clients today. But that's largely the structure of the market as we head into the final trading day of the week. So a lot of back and forth, but not a lot's changed. Right? Not much changing on a day-to-day basis. And, that's, to me, it's a good opportunity with, near-term overbought conditions to be up to speed, to be putting your list together, to be identifying where's the leadership, where is the rotation playing out, right? We've talked a lot about it. I write about it constantly. But when markets are overbought, I think to me, it's a sign of take your foot off the gas a little bit, right? If you used oversold conditions down here to get more aggressive, then you're there. And your winners will take care of themselves. You'll manage risk on the names that are not winners, and then you'll continue to build your lists and look for ideas. At least that's how I frame it up. I know that's what I've been spending a lot of time doing. You're not putting a ton of new names on just as I'm watching. I'm kind of set up the way I want to be set up based on this consolidation within the context of an uptrend with an upside bias. And then, I'll be looking for oversold conditions above these support levels to let me know that it's time to get more aggressive. So that's how I'm framing it, but not a ton changed here in the near term. Let's take a look at our market in a minute. What are we writing about today? Well, the battle under the surface is certainly raging on, right? If all you're looking at is the indexes, you're kind of missing the big picture, which is the battle, growth, value, small, large, and some of the nuances within that. We talk about them here. We highlight them. As I've been saying for the past few weeks, the layup, set it and forget it, own growth and nothing but growth trade has certainly become a lot harder. But that in a good way, because that's a sign of increased participation to the upside, sets up better opportunities or more opportunities. But you have to be mindful of them. You don't want to get dogmatic in a 2-year view. Small caps extend their recent outperformance. Growth value continues to be under pressure in the near term below the consolidation. High beta is trading near 52-week highs and leading low volatility. So that's another data point on the rotation trade, if you will. Futures point to a mixed open, as I said today. Major indices from a power bar perspective, everything green yesterday, so that's encouraging. The Dow is up 20 basis points, 3-3 bulls to bears there. S&P 500 adds 0.5%, 126 to 56, bull bears there. NASDAQ up 75 or 78 basis points, 15 to 13. Small caps up a like amount, 77 basis points, 823 bulls for 192 bears in the small caps. Bonds uptick, sending yields lower. Energy, I think this is the third time this week we've seen energy as the leading sector. 3 bulls to 2 bears after adding 1.5% on the day. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Major indexes are mixed. Let's take a look at our stock of the day now. Speaking of rotation, speaking of seeing themes that are playing out under the surface of the market, we have a personality change, number one, in the stock, but number two, in the broker dealer and exchanges ETF. I highlight in my note IAI shifting from an underperformer to an outperformer in the near term here. Morgan Stanley, a holding within that fund, has a bullish rating, strong trend, strong industry group as we trade above this rising long-term trend line. Money flow is bullish. Now, we are overbought in the near term, but I'm encouraged by the breakout to 52-week highs. In particular, the breakout to 52-week highs coinciding with this big shift in relative strength. So you have a bit of a personality change. You're seeing strengthening relative strength, or a little bit redundant, but it is what it is. The intensity of outperformance is getting stronger, and that's coinciding with bullish money flow. So signs of accumulation there. But I mean, this is a big base out of which we're breaking. You have solid support that you can shoot against at the $55 level. So to me, this makes a lot of sense. And if you want to frame it up in a classical charting perspective, call the low 25, call the high of the range 55. That's 30 points. That gets you an upside objective of 85 if you add those 30 to the 55. Now, I'm not saying we're going there. I'm saying that if you subscribe to the classical charting view, you have this breakout here that has an upside objective of 85, and you have a solid level to shoot against at $55. So with the stock trading at 58, that could be pretty compelling for those who view the market that way. Me personally, I see a breakout. I see a bullish stock that's outperforming with bullish money flow. That's encouraging to me, and that's how I'm framing it up here and now. Highlighted in my note today, highlighted for you here on the show. Let's take a look at the sector tracker movement of the last 5 days for the major sectors in the S&P 500. Energy, industrials, fins, and materials at the top of the list, folks. That's your cyclical. That's your value. It's there. You're seeing it. It's playing out. Now, does that mean you just run from growth? Absolutely not. There are opportunities under the surface. But like I said, it's not the easy trade anymore. Make of that what you will. Discretionary REITs and comms are middle of the road. Tech and staples still higher, but lagging. Healthcare and utilities down over the past 5 days of trading. So, an interesting leaderboard here over the past week. I like seeing utilities and staples towards the bottom of the list. If you're bullish on equities as an asset class, as we are, you want to see those defensive groups lagging. They can be up. That's fine. That's breadth. But we want to see them underperforming, and that certainly is what we're seeing here in the near term. Our industry and focus, software and services, past 6 months been a winner, leading the S&P by over 10%. Has a strong power bar ratio, 42 to 26 bulls to bears. Currently ranked number 14 of 21 subsectors. It's kind of interesting to me, though, that this is not pure software. When you think of software, when you think of the Adobes and the CRMs of the world, this is software and services. So, Conduent is a services company. Kashi, CACI, ADS is a services company. They all have very bullish ratings. They're all holdings in the fund. Right. So if we look at XSW, right, we talked about the power bar. It has a bullish rating. The trend is strong. You're seeing a pop in relative strength here. But what's interesting to me is that people hear software and services and immediately think of, the high flying software names. So what I wanted to do was drill down over the past month and see where the leaders were. So the top 10 performers over the past month are interesting because it's not your who's who of software, right? We don't see Microsoft on this list. We don't see Adobe. We don't see Salesforce on this list of top 10 over the past month. You're seeing some more services names. SABR, right? ADS, Monster's interesting, high profile shift, converting a lot of the cash on their balance sheet to Bitcoin. That's driving a lot of the strength there. But my point is this broadening out away from the monster leaders that we've all become accustomed to. You're seeing it even within the sector, even within the groups, the industry groups, right? You don't see Microsoft on this list. So that's kind of interesting. The fund itself looks solid, trading near 52-week highs, outperforming. It's just overbought here in the near term. Taking a look at what's trending now, yesterday's gainers and losers are movers and shakers. L Brands, as I said yesterday, was trading higher pre-market on their earnings report. Devon caught an upgrade at Morgan Stanley back on the 17th. Other than that, I think it's just the, lifting with energy. Zebra, nothing company specific. Same with Etsy, SPG. Seemed to be a lot of demand for their secondary offering. They had to upsize it, and that got people excited, I guess, up 5.25%. Loser side of the board, RHI, Robert Half reported earnings. They did catch a downgrade today at Credit Suisse. CNC, didn't see anything company specific there. A lot of moving parts in the healthcare space, especially now with Amazon as a threat. EL, Estee Lauder, no company specific news to drive the flow yesterday. Anthem, there was some CMS open enrollment data. Maybe some folks are queuing in on that. Anthem down 3.25%, and WRB, nothing company specific to take 3% out of that stock yesterday. So let's dive in now to the themes, the trends, the relative relationships. I spend my Fridays in my note looking at a lot of key themes and trends in the market, as longtime readers and listeners know. And this is a big one. I mean, this is a potential massive shift in the market if it continues to play out. This is IWM relative to the S&P 500. So small caps relative to large caps, right? And this has been in a downtrend for years, 2 years. Saw some stabilization at the March, April, May lows, and now working higher. Right? Take out the 200-day, take out a key resistance area, and now continuing to move higher. Now the RSI of the ratio confirming what we're seeing after becoming massively oversold in the sell-off, gradually working its way higher, shifting to bullish ranges. Notice how on recent pullbacks does not become oversold, right? So that's a shift. That's a momentum shift in the ratio. All while the IWM has broken topside through those early 2020 highs and is now trading above its 2018 highs. If you take a look at a longer term chart of small caps, they effectively went nowhere for over 2 years. They topped out in August of 2018 and were grinding sideways with some massive moves to the downside in between. They've now broken topside of those 2018 highs, and it's playing out as they're outperforming. So when we think about shifts under the surface, when we think about how it was easy to just own mega cap, well, there's some opportunities out there in the small cap landscape is how I would frame that up. So it's kind of interesting, the shifts that play out, the battles that rage under the surface of the market are always a lot more interesting to me than what's actually happening at the index level, because this is where your outperformance comes from. This is where your real opportunities lie. If you just cared about the index level, it'd be easy to just buy SPY and do something else with your time, right? If you're listening to these shows, if you're reading and studying the markets, presumably you're trying to do better. And these are the shifts that I think people need to pay attention to, right? Another confirming data point for shifts is high beta versus low volatility, trading up near 5-year highs with a confirmation from momentum. Why is this interesting? Because 2 of the 3 biggest sector weights in the S&P high beta ETF are financials and energy. That's your value. That's your cyclical value, right? So it's the fact that this is on the cusp of breaking the 5-year highs is interesting. It's a confirming data point for everything that we've been talking about here for the past couple of weeks. We'll see how it plays out. Maybe this is resistance. I don't know, but you have a bullish shift in momentum. You're above a 200-day moving average. You're now above a solid support zone. So when you drill down and you see financials and energy in the top 3 sectors here, it gives you a sense of what's happening under the surface of the market. And then finally, here's your growth versus value, still below the lower bound of the consolidation as the RSI of the ratio continues to work its way lower, a series of lower highs. And if you just take a look, you get the Qs versus SPY kind of gone nowhere, right? Just kind of chopping around since July. All right. So these what's important to understand is these trends are there. They've been playing out for a while. That's what's interesting to me. This is September 2nd. Okay. This is long before we had vaccine news. I hope everybody has a great weekend. Take us for a test drive. I'm back with you Monday.